Hello and good morning, everyone. Welcome to yet another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FXPesa. So today we'll be having a key focus on the events that transpired last night. So we know that there was a lot of things going on, ranging from the FOMC press conference, the rate cut. The Bank of Canada also delivered a rate cut, and at the same time, last night we had the meeting between Trump and Chinese President Xi Jinping. So a lot to discuss today. And once we are done with that, we'll also be doing some technical analysis, trying to understand what's currently moving markets, what is the current market structure, and hopefully you'll be able to identify trading opportunities. So as always, remember that this session does not constitute of any form of investment advice. It's not a recommendation to trade, so you should always do your own due diligence and practice proper risk management. So I can already see Smith FX is already in the house. Good morning. Can see Odiwa Opar. Thank you for joining. Hi to you too. Let's begin with the economic calendar. We'll be looking at what happened yesterday and also look at what we'll be expecting today. So yesterday being the 29th of October on a Wednesday, we started with a big surprise in the morning where the consumer price index, which is a measure of inflation, in Australia jumped to 3.5%. That's a big staggering jump compared to the prior month where it was at 3.0%. So the market largely expected 3.1%, but now we got 3.5%, which means that inflation is on the rise in Australia. So quarter over quarter, it was a 1.3% increase, beating an expectation of 1.1%, up from 0.7% in the prior quarter. So this basically tells us something. When you look at interest rates, and in this case, I want us to focus here, you'll notice that the Reserve Bank of Australia has been on a rate cut cycle, and the current interest rate is 3.60%. So from now henceforth, given that inflation is on the rise again, currently at 3.5%, we expect the Reserve Bank of Australia will not be cutting rates anymore unless inflation improves and gets back to target. So that can only mean that interest rates remain high, and that's quite positive for the currency. So we expect the Australian dollar to remain strong and positive. So outside of that, we had the Bank of Canada implementing yet another rate cut. So in this case, you can see that they moved from 2.50% to 2.25%. So quite a fast pace of cutting interest rates. Down from a ceiling of 5%, we have seen several cuts. I would call them almost 10 rate cuts. So 1, 2, 3, 4, 5, 6, 7, 8. This is 8 rate cuts that have happened since the month of April last year. So April 2024. So clearly, it's a very sharp drop in interest rates, and this happens not to be very good for currency. So we should be expecting to see further weakness in the Canadian dollar, while on the other hand, we are looking at further strength in the Australian dollar. So after that, we had the main event of the day. This is the federal funds rate. So the market was pricing in a possibility of 99% that the Fed would cut interest rates, and the Fed delivered. So they cut interest rates by 25 basis points. And now we have a range of between 3.75% to 4.0%. So this rate cut was largely expected. So the main issue that investors were focused on was the Fed or the FOMC press conference. So during the FOMC press conference, the Fed continued to persist that there are still unseen risks. And since the US government is in a shutdown and they don't have a lot of data to work with, then there is a likelihood that they will not be cutting interest rates on the next meeting, which will be happening on the 10th of December. So that is what rocked the markets, and the realization that the Fed may not be cutting anymore this year basically sent markets tanking last night. So, while the market was projecting with a 90% probability that the Fed would go for another rate cut in December, that 90% probability reduced to around 70%. So, if you go to the CME Fed Watch tool on CME group, I will share the link in the comment section. You'll notice that the probabilities really changed overnight. And these are interest rate traders who largely benefit from movements in interest rates. So just a sec. Yeah. The next meeting is happening in 41 days from today, and that's on the 10th of December. So this probability was 90% yesterday, and now it has dropped to 70.3%, indicating that the market is growing more confident that the Fed will not be cutting rates. So with the new rates, we are seeing a 29.7% probability that the Fed even goes for a hike. So in this case, we are looking at a potential where the market is even betting that the Fed could hike rates in December. So that instant change in analyzing and understanding the direction of the Fed led to a strengthening of the dollar and weakening of US equities. So I'll be covering more on that. Trying to find an article here from Scotiabank. So FOMC cuts opens up optionality around December as it waits for the fog to lift. So FOMC cut by 25 basis points as expected. The Federal Reserve will end quantitative tightening on December 1st. Yes, this is another update that happened during last night's meeting. So quantitative tightening is where the Fed has been reducing its balance sheet. And now from December 1st, we'll be seeing a pivot, which means that now the Fed will be looking to expand its balance sheet. So expanding the balance sheet basically means getting into quantitative easing. And whenever you hear easing, think positive about equities and negative about the currency. So it's literally basically printing more money and injecting more cash into the economy. So the FOMC cut its Fed funds rate by 25 basis points as widely expected. The new range 3.75 to 4%. The end of the policy of quantitative tightening was announced and is to be implemented on December 1st. So far, so good in terms of expectations. And none of that mattered. It was Chair Powell's press conference that rocked markets before handing over to mixed US tech earnings in aftermarket. In essence, what Powell and the FOMC did today was to deliberately open up optionality around the next policy decision on December 10th. The committee was clearly uncomfortable with the fact that Fed funds futures were pushing them towards another cut at that meeting, with the Fed assured to be on autopilot. That's not the same thing as saying they won't cut, but they are signaling they want markets to cool their jets for now. So on the end of quantitative tightening, the committee announced that the end of reductions of its summer portfolio effective December 1st. This was widely expected at this meeting. The Fed is following the Bank of Canada's cessation of quantitative tightening that was announced back in January, but is burdened by broader shoulders in global markets and different drivers of funding market pressures. The New York Fed offered details here. Guidance points to rolling over at auction principal payments from Treasury security holdings and reinvestment of principal payments from holdings of agencies into T-bills through the secondary market. So that was a key change that we saw in the FOMC meeting last night. And as a result, now we are seeing a very strong dollar. So on the other hand, Trump is still continuing with his Asia tour in Korea. And the key update was the meeting with Chinese President Xi Jinping. So Trump said meeting with Xi was amazing and outstanding. Trump on China trade deal in agreement on many elements. So Trump reduced fentanyl tariffs to 10% effective immediately. So we all remember some time back when he had hiked the the tariffs by 100%, and that led to a big fall in the markets. But now we are looking at the reduction of tariffs to 10%, and this is likely supposed to boost the markets on the oncoming days. So I'm trying to check if there's anything else I may have missed on the updates. Yes, there's also a deal on rare earths. Trump cuts fentanyl tariffs on China to 10%, says US reached rare earths deal with Beijing. So that's also another big update. We know that rare earths are very important, especially in automobile manufacturing, as well as the making of semiconductors. So with this deal happening, we should be expecting to see some good activity on semiconductor chips going forward. So also, early this morning, the Bank of Japan decided to hold rates in first meeting after Abenomics proponent Takaichi's ascent to Prime Minister. So Japan's central bank on Thursday kept benchmark interest rates steady at 0.5% at its first meeting after Sanae Takaichi, the new Prime Minister, took power as the country's PM earlier this month. The decision was in line with expectations from economists polled by Reuters and comes even as inflation has stayed above the central bank's 2% target for 41 months in a row. US Treasury Secretary Scott Bessent on Monday met with Sasuke Katayama, the new finance minister in the Takaichi administration, and appeared to take aim at Tokyo over the yen's weakness, even commenting on the country's monetary policy. So in this case, Japan is more comfortable with high inflation. They don't want to hurry hiking interest rates. So we'll be looking at the market reaction to this lately. And now going forward, we know that the main event that we are looking forward to will be the ECB press conference and interest rate decision at 4:15 p.m. So the European Central Bank is set to hold interest rates steady at the current level of 2.15%, and markets will be mainly focused on the monetary policy statement as well as the ECB press conference that will be convened later at 4:45 p.m. So we know that the ECB has been on a rate cut cycle, just like the Bank of Canada, and they moved their interest rates from a high of around 4.6%, and since then they have been cutting. And in the last two meetings, they have been holding steady, and on the third meeting, we also expect them to be holding, since they believe that this is a proper flow for interest rates. So while this has been happening, there has been more of a strengthening of the euro compared to the dollar. And so far, I believe since the year started, the euro has been the second strongest against the USD. So to test that theory, we can check from the FinViz website. And as you can see, for the week, the Australian dollar has been the strongest. Remember, we talked about the inflation report, up 0.96% against the USD. The UK pound has been the weakest, down 0.91%. The Japanese yen is also weak, down 0.55%. Swiss franc 0.53%, and euro has been little moved compared to the USD. However, if you look at the year-to-date performance, that is since the year started, the strongest currency has been the Swiss franc. Even though they cut their interest rates to 0%, there has been very strong bets on the Swiss franc, which is up 13.57% to the dollar. There is also the euro, which is up 12.10% against the dollar. The Australian dollar and the UK pound have swapped spaces. Previously, it was the pound which was number 3. Now we have the Australian dollar on the rise, and we should be expecting even more movement from the Australian currency. So the weakest currency for the year has been the US dollar, flat, has been on a losing streak, down over 10% since the year started. And that is compared to a basket of other currencies. But also the Japanese yen has not been really a favorite. It's only up 2.34% against the USD. So for the day, that is since the day started, the fan favorite today is the New Zealand dollar, which is up 0.13%. The euro is slightly higher, 0.07%. but we expect big volatility in the euro after the ECB decision and press conference. The Australian dollar is also doing well. It's up 0.04%, could rally higher. But the key highlight of the day is the Japanese yen, which has dropped by 0.65% compared to the dollar. And if you scan markets today, you'll notice something familiar. After yesterday's volatility, today the markets seem a bit quiet. So it's a bit harder to identify really good trading opportunities. But then we can see that there's something happening with the yen, and that could be our idea to be looking for a trade. So let's move on to some technical analysis and try to understand what could be happening in the charts. So this is called the MetaTrader 5 trading application, used for trading. So as you can see, there is quite a number of things happening. One key thing is that Brent oil has been on a losing streak since yesterday in the afternoon and hasn't really found some level of support. So there's still more room for further drop towards the weekly low of 63.4 and $4 per barrel. So that's the 15 minutes chart. If you go to the 1 hour chart, you'll notice that we had this very bullish week. And then this week we have been getting these gradual drops. And after yesterday's rally, you can see the market erasing some of those gains. So there is a good chance that this bearish momentum continues with a target around 63.414. So while that one is a possibility, we also have to check on gold, which formed a double top pattern about 2 weeks ago. And that was an all-time high of 43.82. And then we had a very sharp drop. And since then, all we have been seeing is further movements downwards. So if you go to the 15 minutes chart, you'll notice that the reaction to the Fed's decision yesterday was a sharp drop in gold losing against the USD, and the drop was backed by a strengthening dollar. So today, you can see gold attempting to make a comeback, and this happened during the Tokyo session. So an attempt to move higher, but then that has flatlined in the London Open. So there is still some good case to build around gold finding some level of support around 38.97. And if you look at the previous 2 4 candlesticks, they're indicating that lower prices are being rejected. And if you look at the 1 hour time frame, you'll notice that since the market opened, there have been several attempts to push higher. So this makes it likely that gold will be looking to retest yesterday's high, which is around a price level of $4,029 per ounce of gold. So we can also see silver also attempting to make a recovery, even after the market opened and we had a sharp retest of yesterday's New York session low. From there, the market has been really attempting to push higher. So it's not the best of setups, but what we are seeing is the market being in some form of consolidation mode. So even if you go to the 5 minutes time frame, you can identify this area as more of a sideways momentum, given that we had the sharp drop yesterday, and now it's just movements up, down, up, down, up, down. So not likely to result in a proper like big impulse move. So perhaps short-term targets if you are a silver trader, and even for gold, we are seeing the same kind of thing. If you go to the 5 minutes chart, one key idea is clear that the market is pushing higher and higher. So if you look at the cycles on the 5 minutes charts, it's showing that we are moving higher. And also after this liquidity grab, we could be seeing further momentum after we break the current structure. So the current structure is not that rosy. You go to a smaller time frame, like 5 minutes chart, you can see this structure needs to be broken for there to be an opportunity to trade higher. So on the currency side, this is the dollar index. This is the market reaction yesterday after FOMC. And today, after the pullback that we saw later past midnight, today we are seeing a continuation of the same. So a properly strong dollar is dominating the markets. And if, for instance, you look at the pound, after the sharp drop yesterday, there has been some recovery. And now the market is looking to retest the same area. So good chance we see the market going for the yesterday's low for pound USD. You look at Euro USD, we still see the same thing. Sharp drop yesterday, a very nice recovery, but now the dollar is persisting in terms of strength, and we could be seeing some further drop, retesting yesterday's low. So for Australian dollar, as we've mentioned, it's a properly strong currency. So ideas of going back down are a bit harder to identify, even though we had a gap here. So if you look at the daily time frame, this key level has been holding for some good time, and we just had the break towards the upside. So after trading in us 2 weeks sideways momentum, we eventually broke this week to bullish momentum. Yes, there's a key level resistance area here, but most likely we could be seeing some form of retest. So even though we are seeing a pullback here, it may not be as clean as what we are seeing in pound USD and Euro USD. As for the dollar Swiss franc, after all this sideways momentum, we had an attempted break or a failed break towards the lower side, which failed, and the market pumped in the opposite. So after the breakout, we had a retest, and now we are facing a potential continuation, which means that we are likely to go for yesterday's high, and things are already shaping up. So for dollar yen, we know that the yen has been the weakest currency. So on the setup we are looking at here, it's a market that forms some form of a cup and a handle. If you look from this high, market goes down and back up to the same point, and then drops but doesn't get to the previous low, and then gets back to the same place, which is always a continuation pattern. And now the newer target is 154.774. So if I had to choose chart of the day, this would be it. USD JPY bullish momentum seems sparkling to me. No much of a pullback. So targets all the way up around 154.774. So you look at the Nikkei 225 index, benefited from the rate decision. So here we are seeing it close even higher. There are no candlesticks on the left. So it's a market where you benefit from the bullish momentum. And now it's on the verge of yet another break. So from the session highs that we had seen here, after the pullback, it has recovered, and now it's retesting the high again, looking to create another new high. So good chance that we see a continuation of this. So while the yen has been rising after the rate decision early this morning, the stock market has been pumping higher. So for UK, we are seeing some kind of consolidation. That is the UK 100 or the FTSE UK 100 index. So it's the benchmark index for the UK stock market, and it's in some form of consolidation. So we should be observing this the same way we were observing this a few days ago. So we observed the sideways momentum. We had a nice break, and the idea was simple. Once you get the break, you trade in the direction of the break, and that resulted in some really nice momentum, which ended yesterday. And now we are in yet another consolidation. So we track this one too, and we trade on the break. So US equities not taking the news well. The news of potential end of rate cuts. Rate cuts were very good for the market, and now that the Fed is signaling that it may not continue with the rate cuts in December, we had this kind of reaction yesterday, a very sharp drop in the Dow Jones. So today we have been testing a key level support. So if you are to change this into something along these lines, then you can see it's a 3-day support, and the market is really attempting to break that support. So if you happen to break that support, there's still more room for downwards momentum. So a breach of this level would likely lead to a close of our previous weekend gap that we did not cross, and potentially hitting the prior resistance here. So a target of around $47,053 per share of the Dow Jones. So you look at the NASDAQ, there was a lot of mixed reaction yesterday, especially after Three of the Magnificent Seven are reporting mixed earnings. And as a result, we should be looking at market open today. That's when we expect to see the big reaction. Remember, the three companies reported after market close. So while this was an earlier drop earlier in the session, the reaction yesterday was mixed. After FOMC, you can see there was a sharp drop, a very strong rally, and then a sharp drop, which basically got us back to where we started, which can be defined as a whipsaw. So while the NASDAQ whipsawed, and then fast forward to the Sydney session, we had a strong rally. We get to the Tokyo session, a strong drop, and now as we get into London, we are seeing this setup playing out. So we'll be looking to trade on the break, and that break might happen during the New York Open when markets process the earnings from Google as well as Meta, which were contrasting as per last night. So you look at the SP500, you notice it's the same thing. Big whipsaw yesterday. Today, it's more or less like a whipsaw. We are almost back at where the day started. So nothing much is happening here. And whenever there's nothing much, what you do as a trader is prepare, because you know that eventually something will happen. So something might happen during the New York Open. So be prepared for some form of break. Bitcoin had a sharp drop after last night's decision. And today we bottomed at around $108,583 per Bitcoin. And since then, we have been seeing a very strong pump, which basically has erased the day's losses. So we're almost back at where we started for the day. And it seems like the case since the market opened. So we'll be watching closely to see if there's any form of break of structure. But for now, without break of structure, we know that we are trading in a bearish channel. The bearish channel is following this path. We can largely fit most of these candlesticks within those two lines, which implies that we are headed this way. And you can already see the signs happening right here. So good chance that we see some form of pullback, but long term, we know that Bitcoin's direction is basically bullish. So we are still in a very strong bull market. It's only that for consolidations in Bitcoin can be extended for some time. So on the other hand, New Zealand USD still on a strong bullish channel. So the idea is to trade when we get to the value area again. So this trend line remains to be our value area. So when we get a pullback to the same area here, then that might generate an idea to now start looking for longs as long as the structure holds. But for now, it's a pullback looking to retest yesterday's low. So the German stock market index was on a sharp fall. And remember the guys on Telegram, we discussed this. So we identified the break here and targeted this area as an exit point. But immediately we got here, notice how the market bounced strongly and seems to be retesting this area again and again. But then looking at what's happening with the European equities, well, today they seem to be making an impact in terms of recovery. So you look at the EU 50 after the strong, very sharp drop. Right now, you can see we are moving higher. So there seems to be an overall form of recovery happening across European equities. You look at the French 40, very sharp drop followed by a very strong rally. Just happened in the last 2 hours. So clearly, this kind of price action that wipes out liquidity on the previous low tends to indicate market moving in the exact opposite direction. So in this case, should be testing this particular trend line for a potential break. So in this case, a potential break would appear likely here. So you look at the Swiss 20 stock market index, clearly a very strong bearish momentum, but for the day, they seem to be gaining some momentum in terms of recovery. And for the Norway 25 stock market index, we are seeing a very huge gap down, similar to what we saw about 3 weeks ago. And what we normally say is that gaps eventually get closed. So this gap was closed, and then this other gap was closed, and now we have another gap in front of us. So likely that we see the market heading to close this gap. So that's it for the day. Thank you very much, everyone. And for those who are new, you should know that these sessions happen every day at 11 a.m. Trying to share something here. So they are all recorded. So in case you miss on a session, you can always find it on the FXPesa YouTube channel. If you don't have a trading account, make sure to check the links in the description below. Register for a trading account. It's free of charge. You get a free demo where you get to practice. And once you're confident, you can go for a live account. If you're looking to learn for the first time, make sure that you go for the Novice to Pro course, which is also available on the FXPesa YouTube channel. All you have to do is to go to playlists, and then from the playlist, scroll, and then check the Novice to Pro course with Rufus Kamau. This will help you get started in trading. So on top of that, we have our podcast, the Bullish Banter podcast, where we get to talk about trading, get to dive deeper into strategies, as well as what's currently happening in the market. So in our latest episode, we hosted another trader who does Forex as well as crypto. So if you want to learn more, make sure to check it out. It's available on the Bullish Banter podcast and still also available on the FXPesa YouTube. So that's it. Check if there's any questions I may not have addressed, and then from there, we see a way forward. So there was a request check on pound USD, Euro USD, gold. I already did that. So good question. What does it mean for the markets now that the Fed decided to cut interest rates by 25 basis points? And would you kindly explain yield on bonds and bonds prices? So the Fed decided that going forward, they will not be cutting interest rates in December. And owing to a couple of things, on one side we have the government shutdown. They're changing the game. It's no longer quantitative tightening. They might go for quantitative easing from December 1. So these are news that tend to point in the direction of stocks moving higher and stocks moving lower and the currency moving higher. So if you check the bonds markets and you focus on the US for the 10-year bond, nothing much of a change, 0.01% increase. So not a lot of volatility in the bonds market for the US. And this basically tells you that the market is still processing the data. So when bond yields are on the rise, it means that the investors are dumping the bonds. And if bond yields are on the drop, then it means that the bonds are attractive. So what we are seeing generally is the currency recovering, and this is still a development as the market processes what it means for the change that happens in December 1, and that change includes pivoting from quantitative tightening into quantitative easing. So Rufus, I've noticed the Swiss franc having a lot of strength against most pairs, but do we see this momentum going on since there is a sentiment that they could go to the negative territory? Well, whenever you see the Swiss National Bank cutting interest rates to zero, it's because their currency has so much demand. So even if they go to negative territory, which they had some years ago, their currency was still very strong and in high demand. So that doesn't impact the strength of the Swiss franc. So good question. Swiss franc against the yen, I think that's a clear one. On the long term, we should be looking at a very strong Swiss franc and a very weak Japanese yen. So it's a clear long-term strategy. So that's it for the day. Thank you very much, everyone. Remember to like and subscribe, share the live with other traders. I hope to see you on the next session. So remember, we'll be having an event officially for Bullish Banter. So more details will be shared next week, and prepare to come and meet other traders who have been part of the same community in terms of trading, discussing markets, analyzing markets, and everything else. So that's it. Enjoy your day.